Hello, this is Mosh. Welcome back to another one. If you're new here, click on that subscribe button. Today I'm going to be talking about the growth stocks I've invested in, and I'm going to show you my ISA account and my portfolio for December. What you can do is watch my previous portfolio updates to see what I was invested in and what I'm invested in right now. I'm going to talk you guys through my portfolio and my next steps, what I'm going to do in the upcoming months. And there are some surprises and some things that may shock some people going through this portfolio. So I hope you enjoy it. I have a plan and I'm sticking to it. So the first thing we go into is AT&T. Now this is something I want to get rid of. It does pay high dividends, but as I've learned not so long ago, if you're a non-US resident, you have to pay 30% tax on any dividends if you're non-US. So me being in the UK, I have to pay 30% tax on the dividends. Now what Trading212 do, they get you to fill in a W8BEN form. What that means as an investor, that reduces your tax in half in terms of dividends. So instead of paying 30%, you're paying 15%. But a lot of people don't take this into account when investing in US stocks that pay good dividends, because you have to minus that 15% off, only if you filled in the W8BEN form. Now if we go into AT&T and we look at it, you can see it's on a loss. However, it's actually not on a loss. Foreign exchange rates affect stocks, especially foreign stocks that you invest in, massively. So if we go into this, you can see that I should actually be up 2.56%. However, due to the currency exchange rate, that's cost me 3.8%. So overall, I'm in a loss when really the price has gone up. But due to the currency exchange rates, it's shown as a loss. BP, I'm still holding on to. I could have sold out quite a while back. It hit my break-even target price. But I was waiting to see if it would climb a little bit more to take some profits, but it didn't, it just dropped. So when it gets to the break-even point again, next time, I'm just gonna sell out and get rid of BP. You can see BT Group is up 27%, so it's doing really well. And in my last video last month, I did say it was gonna keep going up. And even now, I still think it's undervalued. I think it's still got another good 30% to go, so I may invest some more money into this. All right, what you may notice is First Group. Now, First Group are a travel company in the UK. They run buses, trains, and all sorts. Travel is one of those areas that are going to recover due to the vaccine rollout. If you watched my previous video, I had Vanguard with about £2,000 in Vanguard. My Vanguard shares was already up 9%. So what I did, I took the profits and I thought, you know what? I know the average annual rate is about 9%. You get a couple of dividends. It's not gonna get me rich overnight. I mean, it is long-term investing. Now, as I'm still quite young, I have a high risk appetite. So I can take on risk. If I lose money, I've got many, many years, hopefully, to reclaim some of that money back. So I've increased my risk appetite for this year and for next, because I'm gonna invest quite aggressively. And once I've sort of doubled or tripled my funds, I'm gonna go back to ETFs, because they are the safest bet and you don't have to worry about them. You know, I've got other projects on. Again, from my last video, I did say I'm gonna start looking for growth stocks. FuelCell Energy is another growth stock that I've invested in. And you can see it's already up 68%. There was a point where it's up about 80, 90%, but it's something I'm gonna hold on for a minimum of 12 months. I'm gonna see where it goes. I've made this new rule for myself where I'm gonna hold on to stocks for 12 months, see what happens. Unless something drastic happens, the price suddenly starts dropping due to bad news or certain fundamentals, then I'll sell out. Otherwise, I'm gonna hold on 12 months minimum. GSK, again, I don't understand this company. It's a solid UK company. They have very good turnover, very good revenue. They pay very good dividends. If we go into it, you can see, if I go to company details, it's 6.84% dividends that they pay, which is very, very good. And they've been paying consistently as well. So I'm not sure what's happening with GSK. Maybe because they didn't come up with a vaccine and people have pulled some money out, invested in the companies that have developed some vaccines. I don't know. Right, Greencoat UK Wind. Now, initially I invested in it because it's a solid investment and they pay a very good dividend yield. If we go into it, and I've received some before, although it's down 5%, okay, The dividend yield is 5.43%, which is very good. But again, I'm going to sell out when the price increases slightly. I'll even take a little bit of loss and free up that cash to go for growth stocks. You can see IAG, it's not really moved much from since I showed you last time. It's been floating around like the 60-70%, but I'm going to sell out when it gets 100%. Again, I'm going to wait till sort of spring next year or probably after the tax year and see what happens with IAG, because it still has room to climb. A lot of people haven't been on holiday this year, so they've saved up that money hopefully to book some holidays, and that should bring up the demand for flights and holidays. Again, iShares Global Clean Energy ETF is one of my favorite ETFs. I've kept saying the last few months I'm going to invest more and more money into it, but I've not freed up enough funds to put more money into it because I've invested in other things. Royce from last month, I think it was in the negative. It's about 15%, 14% up. It was around 23% up, but again, I think that's one. If you look at the graph, there's a lot of movement to be had, I think, in next year, 2021, when a lot of things do recover and Brexit is done with, and people have a bit more certainty in terms of what's going on. Telefonica, as I said, the dividend yield is amazing on Telefonica. It's slightly up, but that's not really a worry. It's 11.16%, and it is a communications company. If you're on O2, it's Telefonica. They have a worldwide base. 5G rolling out. I think Telefonica is probably one I'm going to hold for a very, very long time unless the dividends come down. As I said in my last video, I'm going to start looking for growth stocks. Growth stocks have the best potential to get high returns, and they have a lot of momentum. Once it starts going, it keeps on climbing, particularly in the electric vehicle market. I've still got shares in NEO, XPEV. I've got Vivo Power in some of my other accounts. So the future is green. So I'm going to start looking at green energy. Some lithium miners I'm going to look into and see what I can find, because I think they have the most potential for growth next year. So my plan going forward, as you can see, I'm going to keep on trying to look for growth stocks. I do have a lot of growth stocks not in my ISA account, like Jumia I invested in, Vivo Power I've invested in, and they give me decent returns and they keep on climbing. So a lot of these growth stocks you can't find on the ISA account, it's in the invest account. Now, if you do want to start your journey in investing and you want a free share worth up to £100, all you have to do is use my link in the description box below and you get a free share from Trading212 up to a value of £100. All you need to do is just sign up. I hope you enjoyed this quick update. I look forward to seeing you in the next one.